Welcome to Topic 1 of MBA 6624, Financial and Risk Management. Today, we begin our journey by looking at the role of the financial controller in modern organizations. This role has expanded significantly from being a back office accountant to becoming a strategic advisor, a compliance guardian, and a key contributor to risk management. Throughout this session, we'll explore not just the functions, but also the growing importance of this role in shaping business success. By the end of this topic, you should be able to achieve 4 clear outcomes. First, you will be able to identify the key responsibilities of financial controllers in different organizations. Second, you will be able to explain how their role supports strategic decision-making beyond day-to-day accounting. Third, you'll develop an understanding of their ethical and compliance responsibilities in upholding integrity. And finally, you'll be able to evaluate the ways financial controllers add measurable value to organizational performance. In the organizational structure, the controller sits in a very influential position. Reporting to the CFO or CEO, they lead teams of accountants and analysts. They also act as the primary contact for external auditors, regulators, and tax authorities. Internally, they support department heads by providing financial clarity. So, the controller's role is not isolated but integrative, ensuring information flows across different parts of the organization. In the organizational structure, the controller sits in a very influential position. Reporting to the CFO or CEO, they lead teams of accountants and analysts. They also act as the primary contact for external auditors, regulators, and tax authorities. Internally, they support department heads by providing financial clarity. So the controller's role is not isolated but integrative, ensuring information flows across different parts of the organization. The core responsibilities of a financial controller are broad. They are in charge of preparing accurate financial reports, designing and maintaining budgets, forecasting future performance, and overseeing internal control systems to prevent fraud and errors. Another key responsibility is ensuring compliance with all relevant laws and regulations. In essence, they ensure that the company's financial house is always in order. In today's competitive environment, controllers have evolved into strategic partners. They don't just prepare numbers, they interpret them and provide insights that guide decision-making. For example, by analyzing cost structures, they can recommend areas for efficiency improvements. By assessing investment proposals, they help management decide where to allocate resources. This advisory role makes controllers indispensable in formulating corporate strategy. Risk management is another critical responsibility. Controllers are trained to identify financial risks such as credit risks, market risks, and operational risks. They design internal controls to minimize these risks and ensure continuous monitoring of exposures. For instance, they may implement checks to prevent unauthorized transactions or develop financial dashboards that highlight unusual spending patterns. Their vigilance protects the organization from potential losses. Budgeting and forecasting are central to a controller's work. They coordinate the budgeting process across departments to create a unified plan. They also prepare rolling forecasts that adapt to changing market conditions. Beyond preparation, they monitor actual results versus budgets and explain variances. This ensures that management can make timely adjustments to keep the organization financially on track. Compliance and governance remain non-negotiable areas. Controllers must ensure that financial statements follow international standards like IFRS or GAAP. They also ensure that tax returns are filed correctly and on time. But beyond technical compliance, controllers also safeguard the ethical standards of financial reporting. This helps build stakeholder trust and avoids reputational damage that can result from non-compliance. With the rise of digital transformation, controllers now rely heavily on technology. Enterprise resource planning or ERP systems automate much of the accounting work, freeing controllers to focus on analysis. Data analytics tools help them interpret trends and predict future outcomes. At the same time, they must also consider cybersecurity risks to protect sensitive financial data. A modern controller is as much a digital finance leader as a traditional accountant. Let's look at a real example. At Unilever, one of the largest consumer goods companies, financial controllers are deeply involved in cost optimization. They monitor supply chain expenses and recommend efficiency measures. They also oversee sustainability-linked reporting, ensuring that environmental and social goals are reflected in financial disclosures. This case highlights how controllers can support both profit and purpose. Financial controllers are expected to uphold the highest ethical standards. They must ensure transparency and accuracy in reporting. They should avoid conflicts of interest and act in the best interest of all stakeholders, not just management. Importantly, they balance the short-term interests of shareholders with the long-term sustainability of the organization. Ethics, therefore, is at the heart of their professional responsibility. The role is not without its challenges. Controllers face increasingly volatile markets, which make forecasting difficult. They also must navigate complex and constantly changing regulations across different jurisdictions. On top of this, they are often under pressure from management or investors to deliver quick results. Balancing these pressures requires resilience, judgment, and strong professional integrity. So, what makes an effective controller? First, strong financial acumen is essential. Second, strategic thinking is necessary to connect numbers with long-term goals. Third, leadership and communication skills help them influence decisions across departments. Finally, in the digital era, being tech-savvy with ERP systems, data analytics, and cybersecurity knowledge is no longer optional but mandatory. In summary, the financial controller is the guardian of financial integrity, a strategic advisor, and an enabler of risk management and compliance. Their role is evolving rapidly in the digital age, making them central to the organization's success. As you reflect on this session, consider this question: how can financial controllers in your own organization contribute more strategically to creating long-term value? Your answer will help you connect this theory to your real-world experience.